Hey guys, how are you all doing? So Dan from Trading with Dan here. So I just wanted to have a talk about collateralized loans in DeFi and basically what it's all about, what the whole DeFi movement is all about. So we'll just go to the article real quick. If you guys just quickly wouldn't mind smashing that like button. And if you're not already subscribed, then yeah, subscribe, and we'll have a look at what I wanted to talk about. So right, so as you guys know on my channel, I'm pretty involved in basically tokens and projects that are involved in decentralized finance. This is just going to be a quick video where I'm just going to talk about some of the principles that a lot of people I spoke to about it don't seem to really understand, but they are pretty simple, complex, pretty simple, basically concepts if I explain them in a simple way. So firstly, loans in DeFi, because it's decentralized, because it's anonymous, it's on the blockchain, there's no like credit checks or anything like that. The loans have to be over collateralized. Why can't I say that? Over collateralized, right? So what that means is you have to put down more money, or well, when I say money, I mean more of a token with a value of a set amount than what you actually are going to borrow of another token. So you might think, well, that's crazy. So if I want to borrow, say, $1,000 or $1,000 worth of a token, and I have to put down $3,000 worth of another token, that's just ridiculous. Like, why would I do that? That's crazy. So firstly, you sort of have to think about the fact that when you buy a house, you do over collateralize that loan. So you buy a house, you have to put down a deposit, and that is the element of the over collateralization of the loan. So you put down a deposit. So what the bank actually has to lend you to buy the house is less than what the house is worth. And then you own that house, and then you put that house up as collateral against the loan, against the mortgage that they've given you. So that house is worth more than your loan because you paid a deposit which obviously went towards the value of the house. So if you paid off some of the value of the house, i.e. through the deposit, then you don't have to borrow the full value of the house to buy the house. Okay, so lots of people have mortgages, so you can see we are already familiar with over collateralized loans, even though you may not have thought about it. So what obviously a lot of people think, they think, oh well, no, I mean, if I want to buy a car and I don't have the money to buy it, I can I can just go to the bank, they'll give me the money up front, I'll pay them it back with interest, with a monthly fee, and that's how I think a loan works. Yeah, of course, that is one type of loan. So why would you want to over collateralize a loan? And why would it be particularly interesting with crypto and obviously doing it through decentralized finance? Well, one of the reasons that I'll explain to you is, so I've got a friend who's got a lot of crypto, like hundreds of thousands of pounds worth. He's English pounds, but obviously that's also hundreds of thousands of dollars worth, or whatever currency you're in. And he basically wants to hold that cryptocurrency, that mainly Bitcoin, some Ethereum, some other currencies. He wants to hold that because he thinks it's going to appreciate in value. He doesn't want to sell it. He doesn't. There's lots of things he basically would spend money on, but he's not about to sell that crypto to do it because he believes that crypto is going to go up in value, and he thinks it's the future. And I'm not here to debate that. I actually agree with that, but I'm not here to spark any sort of debate on the future price of cryptocurrency, because this is to do with the price as well. I mean, cryptocurrency can still be around, but he thinks that it's going to be around and the price is going to go up. So they are obviously different concepts. It can still be around, but the price could be a lot lower. So say he wanted to buy a car. He wanted to buy a house, but he doesn't want to sell his crypto because he thinks it's going to go up. So he could basically get a loan using that crypto as collateral, and then use that money to buy the car, and he hasn't got to sell his crypto. So, and then obviously over that period of the loan, he will have to make payments, if that was how it was structured, because they don't have to be structured that way. They could just be structured in a way that you just pay the whole amount back at a future date. So you can sort of think of it in the respect that instead of borrowing the money in a lump sum from the bank to buy the car and then paying it back bit by bit, he basically puts down, say, $30,000 worth of Bitcoin. He gets then a $10,000 loan based on that $30,000 worth of Bitcoin. He then has however long is specified in that contract to pay that money back, and then during that time that he has the car, he can set aside that amount of money that he would use to repay a loan each month, to then by the end of it he's got it all to pay back. He could do it that way, but yes, but we don't need to get into details of the payment structure. So you can already see that there is a use case for someone that doesn't want to sell their crypto, and wants to actually buy something. Also, they may want to buy another coin, another asset that they think is a good project that's going to go up. This is just obviously he wants to speculate in something else, but he doesn't want to sell his Bitcoin. It's similar to leverage trading, isn't it? But he will have obviously he can take a loan out of the actual crypto that he wants. But obviously then, so he's going to own that crypto. He would have to pay that amount of crypto back by the end of it, but he may then want to do something with that crypto in the meantime. So yeah, he could obviously do that. But so I mean, the main concept behind, the main point where it starts to get really interesting for myself, and why I think it is going to be a massive thing going forwards. If we actually start to look at cryptocurrency being more widely used, because we actually have a collapse of the current banking and financial system and the current currency system, basically loans become hard then. It becomes hard if we don't have a sort of a financial system to actually administer those loans and do obviously all the paperwork and all just the administrative tasks, and then also if we don't have something that we are actually using as a viable currency or store of value, or an ability to transact basically value. So people say, yeah, well, gold and silver are a great form of currency, and we may go back to a gold or silver sort of standard, but then is everyone going to have gold or silver to actually transact? If you're not, is a bank or a bank of sorts going to look after that, issue a token saying it's backed by that gold or silver? And you can see where I'm going with this, guys. We just end up back in the same place that we are potentially going to be in soon. So it does make it difficult using gold and silver, and obviously it's not trustless. There has to be not that there has to be, but can we all basically have all our wealth, our gold and silver, on our person or in our house, in our property at any time, and then efficiently protect that from anyone that just wants to roam around taking everyone's property? I mean, we'd have to find some way around it. Obviously, it's easier. It's not a perfect solution, but it is easier to do this with cryptocurrency. So obviously, because you can have it on a card, you can have it on a wallet, as a card, I mean, as a ledger. You could have it on some sort of wallet or decentralized exchange, or however you want to keep it. It's probably easier to keep and hold and hide and keep safe than actual physical bullion. And the reason I'm using that as an example, because I'm working on the assumption that there's not really any sort of fiat value we could use, and just apart from just general bartering, we're going to struggle. So right, okay, so we've got to this point then that we're probably going to have to use something sort of crypto wise, even if it ends up, well, not even if it ends up being a central bank currency, because realistically a central bank currency will just be a fiat currency that they'll print lots of and do whatever they want with, and just whatever sort of the same shenanigans. But if we have some sort of decentralized currency that potentially has a low or set inflation, or even no inflation, or even a deflation built in, but that probably wouldn't be ideal. But you'd like, say, Bitcoin, for example. So we will use Bitcoin as an example, because Bitcoin at the moment is the only really as closest to an actual properly decentralized network we've got. Obviously, none of the other tokens or coins really do come close to being decentralized, and even though they may say they are still, they're not decentralized in the fact that they can be attacked. They can be attacked by somebody basically taking control of, 51% attack basically. It's very inefficient for someone to try and get 51% of obviously the Bitcoin mining sort of hash rate, and then it's sort of like if someone does do that or tries to do that, I mean, then it's not good for the value of Bitcoin. So the Bitcoin that they're trying to then basically get control of won't necessarily be worth as much, because it becomes less secure, and that's obviously part of its value. So let's say we are working on that sort of basis. So we can now start to obviously have smart contracts with whatever sort of conditions that we do want. Really, everyone will sort of earn their crypto through whatever work they do. They'll earn that money, and that money then will go into their whatever system we do use, their ledger, their database, however we're going to do it. That will then be theirs, and they don't necessarily have to go and actually spend or use that of the actual base important main currency, and they can then get basically over collateralized loans to do basically whatever they want to get loans for. And you might think, well, why can't we just sell the currency on an open market and then just buy whatever you want? Well, for one thing, what are you going to necessarily sell that into if we've not really got stability in the underlying sort of fiat currency, or there isn't one? And I know these things may seem a bit extreme, but you've just got to look at the price of gold and silver at the moment, and how fast they're going up, to know that basically the actual fiat currencies that we've got around the whole world are not doing very well. So there is a real risk that fiat currency is just going to fall to the wayside. And it's not that Bitcoin and gold and silver are really going up and they're becoming loads more valuable. They're just becoming the only unit of account we can use, and the actual fiat units of account are going down in value. So we can't. So basically, it's just not a reliable unit of account. So people then will have obviously the option to keep hold of their crypto and or their Bitcoin or whatever they sort of earn, and they can obviously choose if they basically say want to make a big purchase, like a house or something like that they do want to buy, then they could sell. They could basically sell or swap the crypto, or we could find a way where we have property on the blockchain, so the house that they own can be on. Obviously that will take some sort of outside governance, but have a house that somebody owns that could then be collateralized on the blockchain, and then what you could have is then they obviously have that with their crypto basically against it, and they're paying back, just obviously paying back whatever the loan term, however they program that contract. So it is basically it is very interesting, and I think it is very necessary. And all that we kind of can know is that during the course of history, all fiat currencies have all basically gone to zero. Even the dollar now is practically zero percentage purchasing power terms from what it was 100 years ago. So all these currencies, they don't last because they can be manipulated, corrupted. They have to rely on the people issuing them, and them being, well, one, being responsible, and two, themselves not just disappearing and losing whatever power they have to enforce the actual use of that currency. So that is a guarantee. There is one guarantee with fiat currencies, that they all basically go to zero. And the reason they do that is just because humans are how humans are. They are greedy. They do the things that they best benefits either them or their immediate family or their clan or their their ethnic race, even just humans, not I was saying all humans do that, but lots of humans, that's how they operate. We are selfish creatures. It's how we are programmed, because it's how we survive. So that is why when it comes to sort of a finance system, and bear in mind, all a finance system should really be is a way of transacting basically value, and you basically passing on the value you've created to someone else for some value they've created that you want. The actual money system shouldn't be there as a means of profit, and I know that might sound like a radical concept, but that is not a radical concept. What is the radical concept is that the actual, just a pure system of that should only really be transferring people's value that they've created and giving it to someone else for a value they've created. Obviously, it's like if I want a builder, I mean, very simple. If I want, say, a plasterer to come and plaster my wall, and I am a butcher, and it's like, well, all I could really do is give him all the meat that he wants to basically plaster my wall, and then, I mean, it's not an efficient way of obviously conducting trade, is it? So it's kind of like I have to swap my meat into something else, sort of a base currency, and then he then obviously, I pay him with that, and then he then uses that base currency to buy what he needs, which isn't necessarily loads of meat. So that's that system that we've had to put in place to facilitate obviously the bartering and trading, because that's highly inefficient, has been hijacked. Basically has been hijacked for people that then manipulate that to and then skim. And when I say skim, I think skim doesn't really do it justice, because I actually think they take so much out of the system, so much away, that you can't call it skimming. It's not like skimming the cream off the top of the milk, the tiny bit off the top. They are literally wholesale just destroying everything. So they will print currencies that ultimately go to being worthless, and that whole value they had when they printed it, they spent it and used it and kept it and did whatever they did. And that's why the rich get richer and the poor get poorer. So if we have a system that is fully decentralized, so it isn't manipulated, all it does is serve its one function, which is to facilitate the transfer of value created by people to other people, so they can then transfer that value to other people, and it's just a unit of account of value. If that can be achieved, which it can be achieved through decentralized, obviously, cryptocurrencies, then basically the whole world does then start to run a lot more efficiently, because we don't have this massive drag of the financial system doing everything that it is basically doing for its own benefit, for it's the people that control it, and really with no regard at all for the rest of the people. So that kind of brings me to back full circle to actually decentralized finance, because it's one thing to have that unit of account, that is one thing, but having the ability to swap basically our value in a way that isn't manipulated or basically massively efficient, that is one aspect of finance. The other big aspect of finance is obviously loans. We kind of, in a way, we have to we have to basically have big purchases, like maybe where we live or cars or things like that, and we kind of need them, and then need to pay them back over time. But I mean, thinking of that concept, I know that this may seem absolutely crazy, but if we did have an efficient financial system, and I don't like calling it a financial system because that implies as banks, but just an efficient transfer system, transfer mechanism, then there wouldn't be a lot of lost value, and there would be sort of deflation in the price of goods, and there wouldn't be basically loss of your purchasing power by inflation, and you would actually be able to afford a lot more things than you think you could afford now in this massively inefficient system. And that's not to say we're all going to be loads richer and we're all going to basically be able to buy everything that we want. It just means that we're all going to be operating with a currency system that's more sound, so there isn't a lot of slippage and loss, so we obviously end up benefiting by having that extra value ourselves, so it doesn't take as long to buy a house or a car. And then you also have to think about the fact that, okay, properties are really expensive, that's a lot of money. Properties don't necessarily have to be that expensive, or shouldn't necessarily be that expensive, or ever were that expensive. Properties are only that expensive purely due to the manipulation of the currency system, and the fact that basically banks will just issue loans and money into existence out of nowhere, and then that money out of nowhere then basically goes to pump up the prices of certain things, and then you get house price inflation, you get inflation of all sorts of prices of things. That can't happen in an efficient system, and obviously a decentralized trustless system of currency and of loans and of the whole lot, you actually start to realize the value of things become basically what they have to be, because if they are more than what people can necessarily afford in a system that can't be corrupted, then the price of whatever they need will have to come down and will have less value. And I mean, that isn't the worst thing in the world. The reason we need to have house prices high and going up now is because the banking system, which is basically a Ponzi fiat system, will collapse if that collateral, as in the house values, go down. People think it's because, well, people in the houses, they wouldn't want prices to go down, etc. It's nothing to do with the people in the houses. It's to do with the banks that basically own all that mortgage debt. And then if the financial system collapses, which the banks are obviously the gatekeepers of, the custodians of, then what happens? We end up in the situation pretty much that we are going to end up in, because we've already had the actual real banks basically die in 2008, and so we've had to revert back to the central banks finally as the bank of last resort, the lender and the borrower of last resort, that is basically printing all the currency directly. And when that goes, there is no backstop after that. So the real banks, the actual financial system died in 2008. That was done. Central banks, basically issuers of issuers of whatever they want, currency, financial wise. They are basically doing everything they can in overdrive now, and it's not going to end well. It isn't a solution to everything. We all know that. At the end of the day, common sense tells us maybe it can buy a few more years, maybe months, weeks, whatever of the current system, but it is going to fail. It isn't going to last. We do need a sound system. We've had this experiment. We've had many experiments in various empires and countries in the past, and it always ends the same way, basically. So decentralized finance is the key. It is the key. Decentralized loans. These are the key, I believe, to going forwards, because what it means is that people don't have to sell their crypto to buy fiat to do things, right? And that is a very important concept, because when you sell crypto, you're selling crypto, that goes down. You're buying fiat, basically, that then gets supported by it. And it's sort of the whole wrong way to be doing things, basically. It's not the fiat that should be getting propped up, that's getting printed into oblivion anyway. It should be the crypto that's getting kept and not spent. So if you then don't have to spend your crypto, you can use that as collateral then to buy the things that you need. And when I say buy, I just mean exchange for the things that you want or need. Then you don't have to sell crypto. So crypto becomes a lot more stable. It doesn't have the big selling pressure. It will probably just appreciate in value as the current value of everything has to basically seep into basically crypto value. It just has to be crypto value. So it doesn't mean that necessarily the actual dollar value of everything has to then go into crypto value, because that dollar value is wrong. That dollar value, those dollar values, that those price tags on things like Tesla, like big houses, like just those price tags are wrong. Those price tags are incorrect, because they're price tagged in a crazy manipulated currency where there's lots of it sloshing around, where it doesn't really know what to do with itself, because it's a massively inefficient system. So if we don't have that, and we have an efficient system, and the blockchain, that crypto system, that trustless system, that decentralized system, that uncorrupt system, that system that can't be manipulated, if that absorbs all the value, we then all of a sudden have a very efficient system. And do you know what people don't want us to have? An efficient system where people can't really game it and control it is the people that currently game and control our current system and that control us all, because clearly they're going to lose their power, aren't they? They don't want that. They want us to stay in the current system. That is why, I mean, you can ignore crypto at the moment. They can ignore crypto at the moment because they don't really see it as the biggest threat, but they do see gold and silver prices as a big threat, because that they are basically directly telling everybody that cash is trash, that the fiat currency is going to pot. There's just, you can't hold it anymore. It's not worth anything, and that is what we're getting now, guys. That is what we're getting. So the problem we've got with decentralized finance at the moment is similar to the systems that the other cryptocurrencies that aren't Bitcoin, and even to an extent Bitcoin is its decentralized nature and its ability, its openness to attack due to it. It's due to obviously it not being as decentralized as it could be. So obviously Bitcoin is decentralized, but a lot of these DeFi protocols, they are centralized, or if they are decentralized, then they are open to attack vectors, because they don't obviously have the same sort of decentralized network that Bitcoin has. So whilst this infrastructure is developing, the system is growing, the ecosystem is growing, it's basically in its infancy, like Bitcoin was in its infancy. There weren't many people mining it. It wasn't secure. Bitcoin wasn't worth a lot because of those reasons. But now, the more it becomes more centralized and secure, the more it goes up in value. So so that's obviously what has to happen with these decentralized finance protocols. They have to become bigger, they have to absorb more value, they have to become more decentralized, they have to become less efficient for someone to attack, as in they have to put in more money than they can get out of it. And we need to have, and those systems will just grow over time. And that is why I'm so really interested in DeFi, and I think why DeFi stop barking the next bull run, and why DeFi coins and protocols, some of them will be the big winners of the next bull run. And that is the reason why, because it quite literally could, well, I believe it will be. There won't be a better system of account for the world than an actual decentralized cryptocurrency that can't be manipulated by people, because everything will be more efficient. There won't be that struggle for everything everybody needs in the world, because there isn't a limit of all the things we all need in the world. There is enough. It's just getting it round to where it's needed. That is the problem, and that's really that's really why we have these issues. And then people say, well, billionaires aren't bad, they have all this money. But when you have a billionaire, and I'm not going to go along and eat the rich sort of triad, I'm just going to say that it's just lost value, it's inefficiency in a system. When you have a billionaire with however many billions in his bank, that billions could be food for someone else, it could be other things, and if it all gets stored in one person's bank due to the fact they can sort of manipulate the system, then that is basically lost productivity, lost wealth, lost value from the system. If someone becomes a millionaire, billionaire, trillionaire, whatever, in the decentralized system, they're obviously doing something good for the system, for society, for them to accumulate that money, and that's obviously different. But what you do find with a lot of billionaires and people that are rich in the current system is that they're very good at gaming the current system with their wealth to basically get and keep and hold more wealth, and they're good at it, and the money talks. They can corrupt other people in the system, and that is the real reason to me why these people do so well. People might think, yeah, not Bill Gates, Jeff Bezos at Amazon, he's great, everything's cheaper on Amazon, but he has taken a lot of people, a lot of basically smaller businesses and companies out of action, out of business. And you might think, well, it means everything is cheaper, blurdy blur. But if you have a thriving high street in your own economy, money is sloshing around your own economy, everyone is benefiting from that. It is a better system. When you have just someone the other side of the world, to wherever you may be, and basically selling you something a bit cheaper, and then drawing all of that capital and profit out of your ecosystem, out of your your neighborhood, your what's the word I'm trying to look for? Anyway, you know what I mean, out of your town, then I mean obviously you're going to struggle to thrive, aren't you? In the same way. And is it worth having that little extra something cheaper, and then the fact that your high street is depressing and there's nothing to do, there aren't people working there aren't jobs, it isn't vibrant, it isn't, people aren't happy, people are earning money. That is a lot better way to pay money, because then you think, well, those people make up the money, they can basically get taxed, we can use that tax money then to do things to make that high street vibrant or whatever. But these guys, they don't pay tax. They don't pay tax. It's just another part of the inefficient system that they corrupt. They don't pay tax because they're rich and they can corrupt and they can lobby the system. So I have gone on a rant like I just didn't want to go on. But anyway, DeFi, decentralized finance and loans in crypto, over collateralized loans. This is the missing link, I believe, for the whole crypto infrastructure to basically take over. And the main problem that this has got at the moment is just that it's small and it's new, and it's how everything has to start. Everything's small and new. When a baby's born, they're small and new, they're defenseless, they can't do a lot. They need time to grow, they need nurturing, they need looking after. They grow there and they become strong and then they flourish. So it's the same with the DeFi, the current DeFi system. It needs time to find its feet, to grow, to become secure. Basically, the network, the decentralized network protocols, systems, they have to become secure. And then when they become secure, like Bitcoin is secure, then they can basically take crypto to the next level, take humanity to the next level. I know that sounds crazy, but hopefully from what I've just explained to you about how it can benefit everybody and everything, then you can see that I'm not being boombastic. Do you know what I mean? I'm not being hyperbolic by saying it could literally change humanity for the better. Like, they're just taking out that inefficiency in the current financial system will make everybody's lives better. So there we go, guys. So I am going to do I'm going to do an in detail presentation on this that I am currently in the process of doing, and this was only meant to be just a quick video where I wanted to get these thoughts across now, but I mean, I guess this has gone on for quite long now. Let me just check. Yeah, 30 minutes. Anyway, so that's it. End of lecture, guys. End of lecture. I hope you found that interesting. Yeah, DeFi is the future. DeFi is going to change the world. It's going to change humanity. It's going to change us for the best. It's going to change crypto. It's going to change crypto for the best. It's going to change everything. So thanks for listening, guys. Remember, this is not financial advice. I'm not a financial advisor. Always do your own research. And I will speak to you guys soon.